The Empirical Energy Podcast blows open the silent revolution, rewriting the rules of global energy markets. Measured, verified energy is no longer an alternative. It's becoming the gold standard. We dive deep with the producers, traders, consultants, and renegades driving this seismic shift. Step inside the raw mechanics of how verification and blockchain-fueled trading are dismantling the old systems and creating a future where alternative energy doesn't just compete, it takes over. This is the movement of reshaping energy as we know it, bold, unstoppable, and just getting started. Here is your host, Mark Smith.
Performance things.
Oops, should have hit that earlier. Sorry.
That's all right. Well, things started changing and the metrics in which we were judged by started changing. And it's a complicated process, really. But what Avenirre set out to do from within an upstream company is, could we create a solution where we could optimize our cash flow daily using our own data in order to make better decisions? And so, who is this for? If you're here, if you're using volumetric rules of thumbs and you feel, the pressure to start cutting costs and do volumes, there's other things in terms of cash flow that make a difference there. Your differentials, your ownership, any operators like the super major that Mark talked about, they've been tasked with improving their cash flow by a substantial amount. And it's, there's whether it's small company or big companies, everybody is starting to experience this, and then engineers who need to know which wells are underperforming, not necessarily just by volume, but actually what's the financial impact of that too. Could be downtime. Production engineers who need to know kind of, if they're tasked with, lowering LOE, being able to see LOE is usually critical to be able to do that. And that's not often handed to them in any fully functional way. So anyway, any company that needs to modernize their processes, and, Avenirre has 30 customers and they've all been a part of one of these. They've all needed some improvement. So, this is really critical. This really tells a story of how difficult it is to be an operating company right now. Is we used to rely on these old school ways of using volumes, and now we're moving to this new way of using cash flow. Well, using volumes, you're essentially using one metric, being volume. If you're using cash flow, you're doing some pretty rigorous math using differentials and forward volumes and forward pricing in order to really change the way you look at your company. So, on the bottom left, a lot of people would say we need to bring these wells back online, and they spend a lot of money and time on them, not knowing if they're even economic when they went off. And, so which begs the question, does that make sense to do that if the wells were not profitable when they went offline? So there's that kind of shift there. So this key insight here, and it's, more than anything, it's nomenclature, is optimized company cash flow is really optimized production. So getting the most out of the wells that you can get, you need to be able to do that. And a lot of production reporting platforms really can't do that. And then you need to optimize your expenses. And in turn, what you're doing is you're maximizing your margin, your dollar amount that you're making per unit volume. And it's key. And that's why this is a really challenging process. And I had to do it. And a lot of people out there are really struggling with it now. So, and then here's another key. This is really challenging too, is you really can't drive your business by looking in the rearview mirror. If you're going to start getting your data and doing what Avenirre does, is it's scattered, right? You got to find it. Plus, how old is the data, particularly your expense data? And, if you really want to solve it the old way, you would hire some people, some engineers, some interns, and then, everything just kind of becomes a bit more chaotic and less economic when you do that. So the concept here is, let's do it forward looking. The point here is Avenirre is something new. It's not something that you've seen before. It is processes that you've experienced before, but not in a solution that you've seen before. So we do forward looking economics every day at the well level. So how do we do it? Well, we use technology and we automate the process. And we provide it. It's all in a single source of truth, which means it's all housed on Azure. And a lot of times, as everybody who's on this call knows, you might have spreadsheets on somebody's desktop on a server somewhere. So just to make sure we have confidence, we put everything on the cloud. And then, essentially we use that data to give you some real results every day. And this example here is our morning report, which tells us a couple of really important things: how healthy are our wells, and then also how much cash flow is impacted by the wells that are unhealthy. And this was uniquely developed by Avenirre from a request from one of our customers. How do you trust it? Right. There's a lot of numbers that go into it. And if it was simple, we would all do it every day, but it does get complicated. Every well has their own differential and, ownership. So what we do is we take your inputs, your production, your forecast, expenses, differentials in order to create a daily reserve report, which we then turn into a cash flow. So fully defensible. I have worked through the data with customers before, and we wind up with the same number and they have their moment. And, nicely, we have customers who don't have reserve reports. So we have an internal auto forecasting mechanism that will auto forecast your wells for you. And there's some really quick benefits of doing that. And then at year end, this time of year, we help our customers prepare because we already have all the expense and differential data already pre-populated in Avenirre. So we kind of help them facilitate with the reserve engineer. And what you're seeing here is our reserve dashboard. And on the left, this big column here, or this big block on the far left, is actually strip pricing. And it's kind of unique. I mean, how many software platforms do we know of in oil and gas that automatically pull in real-time pricing? And, as far as I know, there's not reserve softwares that do it. You got to kind of export it and import it. So as a very dynamic, quick process at any time during the day from your phone or from a desktop, you can generate a new forward cash flow. So, what do I get? What do our customers get? You get immediate visibility into financial health. This is our cash flow dashboard. And what's interesting here is if you look at the header on the top, there's 303 wells. And by performing this reserve report and forecasting the cash flow, we can quickly see on the left that out of the 303, 178 of them are uneconomic. That's pretty shocking. And our customers aren't usually accustomed to seeing that. So we'll iterate the process. We'll make sure we have all the right data. And then once we get it set, then we can kind of see exactly how we start attacking this problem. You can also see in the top right, you've got your 6 and 12 month operating cash flow and 24 and 36. So you can see as a cumulative, but that's the danger is the cumulative can hide these losses, right? So that's where, it can get a little bit dangerous. And when we go to the next page here, this is a case study, right? And these are real world case studies. So I'll ask our customers, and when we do demos, are all of your wells optimized? Well, I think, if they're producing, then they're optimized. In reality, it's really the rock properties that tell us whether it's optimized. And that's what our auto forecast does. So we had a customer who said that, look, our production is optimized. So we took their production and their forecasts in 2025, and we showed them these deficiencies. And the deficiencies was 87 barrels a day, right? Which 87 barrels a day for this customer is not a lot. But in reality, if you look at it in a dollar amount, it's $1.2 million of revenue a month that just needs some attention. Somebody needs to look at it. Well, are they looking at all 300 wells a day, or are they just looking at the wells that have a deficiency? And what we've laid out here essentially is a health alert, a financial health alert for where the operator needs to spend their time. The unit fallacy, and this is a big one. Okay, so if my unit is making money, then the wells are making money. So we have a bunch of customers who have unitized production. Could be 6 wells, could be 600 wells, all in one big unit. And what they do is they look at the top line revenue and then the expenses associated with that. And they say, well, look, that's positive. So in the sample you see here, there's a 34 well unit that's positive. It's showing you here in this red box almost $525,000 cumulative cash flow over the next 6 months. But when we go down to the well level, what we see is 3 of those wells have losses, right? So, in the grand scheme for this one customer, for a West Texas customer that has a bunch of units, in the first 30 days with their data, we found over $300,000 a month of hidden recurring losses on over 300 wells. And you say, well, 300 wells, $300,000, that's $1,000 a well. And when they went back and looked, well, that's about right. And we're still continuing to work through the process with them of identifying which ones we're confident with. But we've been able to help them improve their cash flow by shutting wells in, right? So this is kind of because if you don't identify those, then your wells that are producing are subsidizing the ones that aren't, right? All right. Case study 3, the uneconomic trap. So what I'm showing you here is, kind of just an exercise in visibility. And you're seeing a monthly LOE chart from Avenirre from a customer that I've blurred out. The green line that you see here in the middle of the chart is actually the revenue line. And then all of the bar charts are the individualized expenses. Okay. So what it says is for a period of 6 months back here, all these wells were producing uneconomically. They were producing volumes, but the expenses to produce those volumes were more than the revenue generated from it, right? And we're looking at actual expenses here with an expense forecast created by Avenirre using an average that the customer asks for, along with revenue. And this kind of creates an interesting solution. It's a triple-edged sword. So you have uneconomic wells that oftentimes fall below forecasts, and then you spend time and money to repair those only to bring them on to lose more money, right? So the counterintuitive thought there is you can actually make more money by shutting in wells, but you just have to figure those out. And that's what Avenirre does. So expense visibility, oftentimes my expenses seem fine. And a lot of times people get, they get one roll up. They'll get one summary roll up that shows field wide, county-wide, statewide, whatever it is. And they don't know exactly how those expenses allocate. And when we went through this process, again, in the first 30 days with a customer a year and a half ago, we found $38,000 a month of excessive operating expenses. And I can tell you it was in chemicals and in just looking at the variance from one side of the field to the other. And I can also tell you that there were some other things related to the pumper that really did not mesh. It was all allocated correctly. It just somebody needed to put their eyes on it and create a culture of accountability around the expenses, right? So when you have all of this in one database and one source of truth, you can get more eyes on it and you can get a much better outcome, economic outcome. So it's common to look at this and say, man, that's a lot of data. That's a lot of data. I'm not sure that I can even get it. This is our implementation process. In the first 24 hours, we provision the database and then we meet and we understand what solutions that you want to prioritize. We identify the data and then Avenirre's customer success formats and loads and creates the data the way you want them, the way you configure it, right? What this means is that we don't take a significant amount of time away from you. We make it as easy as possible for you to make the most money possible by essentially farming that out to us and let us creating you a turnkey solution. As former operators ourselves, we didn't like these long implementation cycles. It eroded trusts, created some resentment. And we just said, look, we can't have that. So it's all hands on deck when a customer signs on. We also knew that we needed some alignment. As part of the philosophy of Avenirre, we wanted to be more of a software partner than a software vendor. So our expenses, if you worry about, if you're thinking now about what is this going to cost me? Well, we price, and this is on our website, we charge on a per well basis each month based on volumes. So as far as I know, we're the only software company out there in oil and gas that says as your volumes deplete, your bill will actually lower with it. If your wells are shut in for pipeline reasons or whatever, your expense goes down for that month. And the ultimate goal here is that by helping you find these cash flow leakage points, we provide you a positive monthly return on your Avenirre investment. And that's our goal. And, we're not a software company. We're essentially a team. Everybody here used to work for an oil and gas company. So we understand your business and the first 7 days are important in laying out exactly what you want. Right. Right. So then this is kind of a summation of those case studies, right? So, and a lot of this is even from the company that I ran is, we had this reporting and software efficiency and inefficiency essentially. And we were able to eliminate a couple of software platforms when we adopted Avenirre. And then, we've got a customer that recognized wells below forecast. And then we've got expense savings that we can see. And then in the uneconomic wells of even in the units, you've got this big amount. And in return, when you look at everything that Avenirre will provide you between a production variance, a reserve dashboard, a daily cash flow report, and a morning report showing you which wells are unhealthy, you have the ability to go out and act upon that in order to save the company cash flow. So that's the key. This slide here should convey what you get for your Avenirre expense and how it becomes a symbiotic relationship where we help you uncover more cash flow than your Avenirre expense. Right. So these are the facts of today. And if you look at what oil pricing is doing and what expenses are doing and what humans costs, our industry really can no longer afford inefficiency. It was able to for a long period of time. This growth at all cost era is over. Investors, public and private, really want some returns on their investments, largely through dividends. And that really requires an efficient team, right? So you can't just keep hiring people, and you need to have trusted capital disciplines, which means you don't go bring on 16 wells before you figured out they were uneconomic when they went offline, right? So point being is let's just all stop relying on cocktail napkin math and really start prioritizing on optimizing on cash flow, because that is really the one true metric. That's why every oil and gas company is here, is to make the most money. So this is something we talk about here in the office is, it's a hard luck life. You're just gonna have to change the way you operate to make the most money. And for people who stick with volumes, without converting those volumes through, by a dollar amount per volume into revenue or cash flow, I think it's a hard road ahead. So, stop guessing, start optimizing. We can quantifiably do it. We have a lot of people who will send us data and we'll do a demo with them. And then, once we do the demo, we're essentially 7 days in already. And then implementation, as far as training, providing support, logons, getting the database fully configured, takes entirely 30 days from contract signing to full implementation.
Nice. Well, Casey, is there a way you could maybe fire up like the actual software? Because I got some questions that have come in, and I think it might help answer some of these questions here. And one of them actually is from Alice, and she asks, Casey, this looks amazing. Can you tell me why wouldn't an operator make their own version of Avenirre?
That's a really good question, and we come across that. The danger is that technology has changed. The way can you see the Avenirre log on?
Yeah, I can. Yeah,
okay.
And by the way, anybody else, if you got questions, feel free to type them in the Q&A box.
Well, Alice, they can. They all know exactly how to do it, but navigating through software can sometimes wind up in a multiple years long process, and with nothing to show for it. Sometimes operators will go find a software consultant who doesn't understand their business to create them a solution that they never really wanted. And it's challenging. And what's unique about Avenirre is we were an oil and gas company and we created the solution. So, whether it's an attempt to create things through Spotfire and have somebody manage that, one way or another, they all can, but oftentimes it winds up being a solution they didn't want, that took a lot longer and cost way too much.
Yeah, Alice, another thing, because when we got into this too, on the Clean Connect side, we're like, hey, I wonder if, these operators are going to have, they're huge companies, right? Multi-billion. Surely they're going to create their own, but not yet. In fact, to be honest with you, Alice, some of the best customers we got are people that have attempted to do, well, in our case, the computer vision and things like that on their own and the AI stuff, and hit a wall with another vendor. And then we come in and we solve the problem. So, and the reason why people who've attempted are great clients is that they've kind of gone through the process of figuring out what they really want. And they believe that, an AI solution is what they want. They just couldn't figure out how to get it. And Casey, I'm sure you're running the same thing where, listen, we've even talked to some pretty big companies, super major size, and said, hey, do you have this? Do you have a cash flow by a well? No. I kind of get some data over here and that's gathered maybe in Pi, and then I get some other data that comes through what's that BI tool. And then I get my expenses after the close of the month, but they don't come in by well, they come in by basin, right? So it's like, cash flow by well, no, I don't know. What have you seen, right? Have you seen other people attempting to create their own, or?
I have. Yeah, we've seen it. And, ultimately it's the old adage of, there's multiple ways of skinning the cat. Some people try it and do just volumes. They use Power BI. We have companies that use Power BI and then actually push everything to an app. EOG has something like over 400 versions of a production app. But the key piece here that we do is we convert the volumes to a dollar amount through pricing, right? That's one of the key things that we do. And then integrated in the platform, you have your daily production reporting. We can accommodate field data capture via SCADA. And it's essentially, for Alice and for a lot of people out there, if your company is doing a reserve report every year, you're getting exactly what Avenirre is providing, with the exception that since we're continuously, it's a living, breathing database and we're continuously bringing in more data, it always is getting refined based on forward volumes, changing prices, changing expenses. So it's kind of a living, breathing monument to making the most money.
Yeah, you mentioned you kind of showed that 30-day sort of period to get going. So how long does it take, before somebody gets, meaningful financial impact, from Avenirre?
Well, based on our background, once we have the visibility to the data, we've been able to provide every customer meaningful financial impact in the first 30 days. So part of the implementation of just is sitting down and saying, look, we put all your data together and this is what we see. Is this correct? And a lot of times, at that point, we're well far ahead of where the customer is on their own data. So we kind of help them transition into, just absorbing the data that they have. And sometimes it's places where there was an overhead expense that was charged up until, say, March of 2023, and the wells continue to producing and they've not. When you add it all up, it might be another $16,000 a month that has been missed in revenue or in expense accounting within an oil and gas company that, nobody knows about. The expense accounting group might not know that something is not right in what they're doing. They're paying bills and then doing joint interest billing, revenue accounting. So, the operations guys are really key in kind of understanding what's going on here. They just need to be empowered with, a better solution, more real time to make better decisions, which again, it's just why there's a natural kind of plug-in here with Clean Connect.
So you mentioned, I think, one of the slides that you're importing like around five sources of data, but what are some of the biggest impediments to adopting Avenirre? Is it the data, or what is it?
It's the data. It's, sometimes, a customer might say, I don't even know where that data is. And that's okay. We can start the process off, and as there's additional discovery to find the data, we can also take very good rules of thumb, on how we set up the database in the absence of data. But when we come across customers, I think there's a perception that it's too big of a change that they want to digest. There's also, maybe a concern about, the accuracy of the data without realizing that we're using their own data to generate this. It's been enlightening to see why people have chosen not to go, with Avenirre in some cases.
So so who actually takes care of the data migration,
Yeah, Avenirre is who takes care of the data migration. We work hand in hand with our customers after they sign the contract. It's, that's kind of the nitty gritty part that nobody looks forward to, but we're so familiar with it now. We use AI to format, AI to QC, AI to load. And then once all the reports are generated, we use AI to QC back to the source data to make sure we provide a confident solution.
So I think one of the reports you mentioned was like a morning report.
Right.
What does that do? I mean, is it like, I'm assuming you say, hey, they're looking at the morning report because it's like the first thing they should do that day, or what? Like, why is it a morning report?
Well, Avenirre is a multidisciplinary platform. Accounting can get in and look at it. Engineers can, multiple people can log on. We don't charge by the seat license. I'm just going to choose here 1001 like that. The operations guys are usually the ones who get in here and they want to know. And this is all just sample randomized data. I'm going to take operator off, central battery. But what this shows us here is essentially for October the 1st of 2025, everything generally was doing pretty well. And then as we get more data with the customer, a lot of times they have a bit of a incomplete data set. And then what we'll be able to see here over time as the platform evolves is you'll be able to see the tubing and casing trends and then how the forecasts behave according, are they above or below forecast? And it's the combination of those that tell us exactly, and I'm going to go one more month forward. It's a combination of those that tell us what's wrong and where and what's the magnitude of the problem, right? Because nobody needs to drive out to a well with a $15, problem. And we have, say in here, once we have in the current month, and we're going to say 1/2026, this one, using my left hand here, we'll be able to see actually what the forward cash flow is by well. And that's really key, is knowing, and here we can see it now, is quickly on this one page. If I'm an engineer and I log into this, I can see that out of my 303 wells, 202 are unhealthy, right? So I can come over here and I can click on that 202. It's going to filter it for me. And what I can see here is that, I've got a number of wells here that not only are they below forecast, but they're going to lose money at forecast. That's what this negative cash flow is. And it's one of the core pieces that makes Avenirre unique is we kind of merge together this concept of volumes and cash flow and well health all on one page here. So you can see here, you can sort, you've got tubing pressure trend, casing pressure trend. Is it above or below forecast for gas and oil? But all of those culminate in one color-coded box. It just says, here are your problems.
So I would imagine, obviously you train them on how to use this software and things like that, but can they actually call you and say, hey, do you have any recommendations on what we actually do to fix some of this stuff? I mean, you're not your typical just software guy that doesn't have, production the cash flow background. So can they actually tap into you for your expertise on actually how to fix some of this stuff?
Yeah, no, that's a really good point. Is customer success is a very big point for Avenirre. And so all of our customers, when they call somebody, they're not going to call a software person. They're not going to call somebody that's an Indian or a Mexico. They're going to call an oil and gas professional, probably out of Fort Worth, to help them navigate through their problem and then maybe even make a suggestion on how to get a better result.
And so, over time, as people learn to, as you said, I think, have the moment that you mentioned, which is, oh, wow, this is my own data. It actually reconciles with my old systems and stuff. When does a customer, and does your software end up replacing, or is it just adding to their software stack?
You have options. If you don't like your production software, you can use the Avenirre integrated daily production reporting component. It doesn't cost you anything more. But if you just want it to be a supplemental piece on top of what you already have, we absolutely do that for customers, and it pays for itself within the first 30 days.
So how does your contract, compare to competitors?
Competitors usually are charging by seat license, by well, and we felt like that was really not aligned with the customer. We kind of, rather than saying the companies are going to pay the bill or the each seat is going to pay the bill, we look at each well like a person, and that person has health benefits. That person has some characteristics to it, what it should be making. And when they're unhealthy, they make less. And when they're unhealthy in Avenirre, we're charged less. So I would say the key thing that we do is it's that pricing mechanism. We price it on a per volume metric. So, and each well has a maximum, right? So if you've got a brand new well coming on, it's probably going to max out at $40 per well per month. But our book price is usually about 20 cents per BOE, per gross BOE per well per month. But, we also know that we don't want to be a burden on customers. But, in return for that expense, what they get is all of the benefits, better decision-making, identification of recurring losses, identification of, out of bounds LOE, and this daily reserve report.
So if you can, realistically, as you go in, you crank in the data and you're looking at this stuff, what kind of savings could they get? So if you're charging 20 cents, could you save them $2 a BOE?
Yeah, the general rule of thumb, and it depends on the culture of the company, the size of the assets, but we've seen everything from a 3x monthly return up into an 11x. And the company that I ran actually had a 5.9x every month, and that was derived by eliminating data eliminating some software platforms, recovering losses that were previously unrecognized, not only in production, but in expenses. Expenses were out of whack. So I would say as a rule of thumb, you're probably going to get a 4 to 5x return, which comes back to your 20 cents.
Excellent. Well, yeah, for us, and one of the things that we're looking at here too is, already serving the ops guys, and giving them that AI control room. So, you know, the fact that we're integrating together allows us on a single dashboard to see all kinds of different things, right? They're seeing the health of the well in real time. They're seeing, in our case, emissions reporting data in real time. They're seeing the monitoring data in real time. And it's really giving them a whole different view, that because up till now, talking about data, a lot of this data has been siloed, right? Or they have to log into, 15 different systems to manage one single site. And I could tell you that probably the number one thing that we see with ops guys, especially, is dashboard fatigue, right? I don't need another dashboard to log into, which is why I think they ultimately appreciate this sort of unified thing that both of our companies are doing, trying to give you log in once and see everything you need to see to manage that site effectively. So.
Yeah, no, and keep in mind, the expense reduction is kind of lowering your cost to produce. Well, you also have to maximize what you're actually producing. And that's really where our customers have been able to supercharge, their monthly cash flow returns based on their Avenirre investment. And sometimes they call us and say, hey, I just need help with this. And we'll spend a couple of hours putting together a quick summary just to try to help them reorient what they're looking for.
So what's typical success criteria? So they call you up, they see a demo, like Alice, they say, dang, this looks pretty slick. What are the kind of success criteria that they give you so that they know within that 30-day period you mentioned that this is going to totally work for them?
Well, in the discovery meeting we might have, or discovery call, we might have an idea of what their goals are and, what data is accessible to them. They might say, look, we have production volumes, but we don't have any forecasts and we don't have any expenses. That becomes, a little bit more challenging, depending on what the goals are. But again, we can still provide them a success case by identifying which wells they have that are below forecast. And a lot of times, the forecast doesn't even make it to the guys in the field. They don't know what the well should be making. So one of the benefits of having kind of a global visibility tool is you're able to see that. But to answer your question, in the discovery call, we'll have a pretty good idea based on the data set that we have. But assuming that we've got, a good data set that we go into it, I think really within that first 7 days, we'll have a good handle on what we can, on how much cash flow that we can help them recover.
So what's some of the ideal, so when you hear, hey, I have this production accounting system, where you hear that, great, because I can integrate with that, out of the box. What are some of those that you integrate with?
Quorum, some of the financial ones that we do, I don't always recommend you do financial ones because that almost needs to be separate for security and audit reasons. But production reporting, there's some SCADA platforms that we've used. Anything that is an open source cloud-based platform is pretty easy. Anything that is open source, even a Rail on-premises platform, is actually pretty easy too. But I would say of our customers, probably 20% of them are actually pulling in data external to Avenirre into Avenirre on a monthly or nightly or monthly schedule.
And they have that all organized by well, so then you could batch it up with the other production data.
Yeah, not always. Sometimes in reserves, it's pretty bad about this. Reserves will have their own unique identifier, and then, accounting might have their own unique identifier. So we try to create a common unique identifier through the well API. So we will create on the back end, Avenirre will create a custom script with a library in it that just says, this weird unique API for an Aries software property goes to this well in Gaines County, a 42 or Freestone County, 42161 county well. And that way, you can kind of, some of those hurdles too, is that this data platform doesn't have API. How do you plan on getting all the data in? That's when I tell the customers to leave it up to us to solve, because that's where we really excel, is creating those master libraries based on the aggregate amount of data that they have.
Alice is asking, hey, Casey, can you show the state report and the production input options, please?
Yeah, the state report is built for, right now, it's built for state of Texas. But when you add in the purchaser statements, which, since wellhead volumes, you're really loading in purchaser volumes, and then it allocates based on a comma point back to each well, the batteries, depending on the disposition. When you load it in, when you load all the configurations in, and then you load the volumes in, you can actually create your state of Texas report and then directly submit it to the Railroad Commission from Avenirre into their EDI. Don't have a lot of customers that use it. They still like doing it the old way. And then what was the other question, Mark?
It was just the production input options.
Yeah. So here's a daily production input page, and I'll show you a customer. I know they won't have a problem showing it because there's real data. So let's say here, we'll go to Blue Cedar, super group of guys here. So I'm going to select, say, in this well list, I'm going to say active wells like this. And then this page was built essentially by my pumpers for pumpers. The platform was built by an operator for operators, but this page was built to look like an Excel spreadsheet because that's what pumpers know. So on any one day, if you take a grease book or an eye well, there's a lot of clicking. And on any one day, the way we built this is a pumper comes in here, selects their route, and then every bit of entry that they need to do, whether it's from their phone or tablet or desktop, they do from one screen. So they would just come in here and enter in their footages, and then everything changes, scroll across, enter in their gas rates for today, press save. And then once the green bar goes all the way across, they're done. For companies that have batteries, say if you've got one of these units with the batteries and all of the production is reported at the battery, we also allow for central battery input every day, which then allocates based on the test rate back to the well in the same way that every production allocation software does.
Okay. So Alice, actually, what source do you use to come up with the cash flow values? Or like, for example, previous completion costs?
Well, this is just forward-looking cash flow based on a PDP curve. So let me go back to a demo data set, and I'm going to pick up one well. And these are really good questions. So if I go to reserve dashboard, and I'm going to select just this first well here, I'll pick one, bullet. So if I go back and I look to 2010, what I can see here is the, standard oil, gas, and water production curve. But the nature of this production curve really tells us what the well should be capable of doing. And gas has kind of gone away, water's kind of sporadic. So all we really have is oil in this case. The Avenirre algorithm for auto decline basically says, I'm not going to use an ARPS because an ARPS is really good at the early life of the well. I'm just going to do a least squares fit at the most recent data because that's what our customers can depend upon. Right. So the key to that is basically saying that the recency of the well is really a good predictor of what the well is going to be able to do in the future. So now what we have is volumes out here. So we've got in the database through the data loader, we've got volumes. So if a company has their own reserve volumes, we'll load it in. So they've got this duality of however they want to do it. They can use the Avenirre auto decline or their own expense types. We can pull the company forecast expense right out of the reserves software. And if we're going to look at, if we don't have it, we can assume some cost per barrel or MCFE. And then maybe this is where Alice is going is this over here is real-time pricing. Okay, so that's pulling as of 1:45 p.m. And we've already rolled into March on the pricing. So the pricing would be $3.88 right now. Okay. So when we run a reserve report, what we have is, if we look down here, we wind up with a standard one-line report. And that standard one-line report takes into account pricing, ownership, expenses, differentials, everything that is common to you already. And so we've got, these are all sample numbers, working interest, revenue interest, net remaining. Well, if we know those volumes out in time, so for, right now for, say, February of 2026, we know what those future volumes are. We know what the future price is, and we also know what the future expense is. We also know differentials. So from that, we can come over to our cash flow management dashboard and then really actually calculate it. And that's where, by well over here, we can come over here and figure out, out of the 303 right here, 178 of them are uneconomic. And, we have a cumulative 6-month operating cash flow loss here. And while we're sitting here, I'll just show you how quick this reserve report is. We'll update it because I think I have see here, we're going to run it at flat at now $65 oil. Like so, since everybody's going to be dreaming today at $65 oil. So now what we're doing is we're creating a new reserve report. And in real time, this will update and it will tell us the run date of this reserve report right here when it's complete. But over here, based on the next month right here, we have the culmination of those forward volumes times the revenue interest times pricing less differential. And then that's essentially your net revenue. And then the net expense is going to be the aggregate expenses multiplied times the working interest. So what we have is the ownership represented in the platform, the true net revenue and the true net expenses deducted to show us where the wells are negative on cash flow.
Hopefully, Alice, that answered your question. Good questions. Casey, this has been good. And, we've been able to show and hopefully deliver everything that everybody I promised you'd get in this webinar. Yeah, look forward to it. We'll be sending the replay to everybody that signed up as well, so they can watch this and maybe share it with their teams to say, hey, look what I just saw, and because it might be hard to explain back at the office, like what all they saw. But Anyway, this will give a chance to share it with their colleagues and stuff. So if there's any last questions there, if not, we'll wrap it up there. I think, Casey, you could bring up your contact info. In fact, we'll be sending it out to everybody on the replay as well. So,
yeah, that'll work.
Yeah,
and it's exciting.
And the good news is that, for all of you who've seen this, the demo won't be generic, right? You can actually go in and kind of think through some of the things that you've seen, and then ask, ahead of time, hey, Casey, I would love to see this, that, and the next thing. And that's what you're going to get on a more custom demo is, be able to ask specific questions about your operations and data and all that good stuff.
Yeah, no, I like it. I love doing it. I love helping people find more cash flow. I mean, it's fun to me. I guess I'm twisted.
Well, no, but I think that's the thing. I think you enjoy having that moment with the clients, where they start going through their data, seeing it in with your software, with all the AI enhancements in the back, and have that moment like, okay, I had no idea that this well or this group of wells was operating as, in such a way. And because I know on another demo I saw, where you were able to actually group wells and then allow really operators to go from sort of firefighter mode to proactively saying, okay, here's my list of stuff I'm going to work on, and because it's the most likely success, the low hanging fruit, so to speak.
Yeah, that's this reserve alarm. So what we do then is, as wells become, they get, as they produce, and say through December, and this is all fabricated data, but what this shows here is that it's a quick look report that just says, look, these wells you had out of the 303, 132 of them are below forecast on gas, 243 are below forecast on oil. And if you want to know which wells they are, you can click over here and look at them. And so that's how I created a well list of basically saying, look, using the regulatory data that has been filed, and I do this for customers, the most recent regulatory data, these are the wells that are actually falling below forecast. Now, I don't know about expenses yet, but these are the wells that are below forecast. And it always catches people off guard because we confuse operationally functional versus optimized, right? So just because it's operational doesn't mean that it's optimized. And in order to optimize it, it's a grind. And all of our customers tell us that we have simplified that grind for them.
Excellent. All right. Well, with that, we'll wrap that up. Casey, thanks so much for being here. And again, look forward to talking with anybody here or anybody watching in the future.
Thank you.
All right.
Okay.
The Empirical Energy Podcast requires more than a conversation. It takes action, research, and collective wisdom. If today's episode resonated with you, we'd love to hear your insights. Join the conversation and help us shape the future together. We'll be back with more stories, strategies, and real-world solutions that are making a difference for everyone. In the meantime, be sure to subscribe, rate, write a review, and share it with someone you think would benefit from it too. Thanks for listening, and we'll see you on the next episode.